Hello, folks. Welcome to the Daily Scan. This is Dan Bird, and today is the day after Election Day, November the 6th. And what a day it was in the market, huh? We're going to go through a little bit of that. I will be doing a session for one rental at a time today. So I'm going to talk a little bit more about the market, and we'll look at the Trump and Harris trades that we talked about last week and see how they did today. And also we'll look at some other things. So if you want to tune into that, you can go to this YouTube channel, One Rental at a Time. It's primarily real estate, but I do a Sunday show with Mr. Zuber on the market, and I'm going to do a little bit later today on that as well. But for today, I want to talk about some scans. This is going to be pretty quick. I'm not going to go through how I do it because that's in some of the previous sessions. Just go back and look at yesterday's or the day before, and you'll see how I actually create them. But the first thing that we'll do is look at what happened today. So to do that, I want to go to the homepage. This is the website, breakpointtrading.net. And there's a weekly newsletter. If you are interested, it's free, no credit card required. Just click right there. So what you'll notice on the market bias, like I said yesterday, it had just started to tick higher. And today it zoomed even more so. So yesterday I said that it hadn't really done so with conviction. Today, without a doubt, there was conviction. So the market bias chart right here, just look at that every day, and it actually gives a pretty good sense for where things are headed. You can see we're in a short-term, medium-term, and long-term bull right now. If you want to look at the details, market bias matrix, you can see how much green there is. All of these green. There's a little bit of red, but mostly all green today, which is pretty amazing. So one that I want to point out is small caps, which is the Russell 2000, IWM. Small caps did fantastic today. That is a clear breakout. So this one had been lagging most of the year, and this one now I think is in catch-up mode. Look at the volume. Of course, everything had huge volume today. But small caps definitely are starting to move higher. The other one that I thought was really interesting is the Magnificent Seven versus the Russell 2000. So this will really bring it home, I think. So the Magnificent Seven are all large cap tech stocks. So how do they do in comparison to the Russell? So this is a relative chart, which means it's the Magnificent Seven versus the Russell 2000 or small caps. So if it's trending up, if it's moving higher, that means the Magnificent Seven is outperforming small caps. If it's moving lower, like it did back here, right after the Fed cut the first time, if it's moving lower like this, that means the Russell is outperforming the Magnificent Seven. And look what's happened in just in the last week, and especially yesterday and today. So Magnificent Seven is significantly underperforming the small caps. So that I think is very interesting. And on that note, let's go over and look at the Magnificent Seven, and we'll do what we did a couple of days ago and look at each of these, because I said that they had failed breakouts. Almost all of them had failed breakouts. Let's see what they look like now. So here's Google. Google started to make a nice run. Google actually was on my one of the key stocks on the daily scan today, which I'll talk about in a second. But that one started to move higher. Amazon broke out with conviction. Nice volume. Apple, not so much. Apple's not participating in this rally. Meta also not participating. So Meta has not broken out. Microsoft not participating. Had a nice little rally today, but it just got back to the 50-day moving average. So it's having a little bit of trouble. NVIDIA, of course, definitely did break out, and they have earnings coming up in a couple of weeks. So NVIDIA definitely has broken out. Tesla broke out. So this is no longer failed breakouts. Netflix, I told you this was a Darvis box, so it's broken out of the box. So this is where Nicholas Darvis would buy some more right there. It's at 780 right now. Here's AMD not doing well. So AMD still can't get back to its downtrend line. SMCI just looks awful. They continue just to fall. They're now at $22. They could, who knows, could go out of business. So SMCI, I might actually take this off, but it's fun to watch it, fun to watch unless you own it, of course. Oracle's another one. There's a breakout for Oracle. This also made the daily scan list, which I'll talk about in a minute. Palantir continues to move higher. It broke out after earnings. Arista Networks, not quite, but right to the resistance line. So this one likely will break out tomorrow. You can see right here, it's right at the resistance, and the MACD, the momentum is just starting to move higher. So it has momentum behind it. So it's probably going to break out tomorrow. Broadcom also has not broken out yet. So most of the chip stocks and some of the big Magnificent Seven just aren't completely breaking out yet. Eli Lilly continues just to move lower. So Eli Lilly had its run back here and had a double top. So there's a double top, 1, 2, started to come down. You can see the momentum went below zero right there. There's lots of other warnings in here. Short-term downtrend, medium-term downtrend right in here. And the momentum below the zero line, and then accelerating then below zero. But right in through this period around 900, roughly 900 to 920, those were the warning signals that Eli Lilly was breaking down. So that's the time you should have gotten out of that one. So that's what those look like. I thought that was very interesting, especially in consideration of the small caps, the Russell 2000. Let's also take a look at the dashboard, and you can see everything. Dow is up 3.5, S&P up 2.5, NASDAQ up almost 3. Interesting, the VIX is below 17. I said this last night, that the VIX is going to drop below 17 after the election, and literally the day after the election, it dropped below 17. And you can see right here, it's all the way down below that green line. The S&P continued to go higher. It's at 16 and a quarter. And now what we like to see is for it to stay there. So the 12-month rate of change is now broken as downtrend line, which means the rate of change now is trending down. So we'd like to see that to continue below 17, and I think it will, especially with the Fed meeting tomorrow. And they'll probably cut rates, which might be another catalyst for the market to move higher again. Although I think in the morning it might pull back. Usually when you have a big move like this, the market needs to consolidate it. So some folks are going to take profits. So it might actually pull back and not just continue to run straight higher. But I think that, and the other thing that I said yesterday was it likely is going to hit 6,000 by the end of the year. Here's the S&P right here on the homepage. And you can see it broke out too. So huge breakout right there on the S&P. Ended at 59.29, so it's only 70 points away from 6,000. And we did 146 points today. So it could hit 6,000 tomorrow, theoretically. Now, especially after the Fed meeting, either tomorrow or the next day. So 6,000 probably is a low number. It might go to 6,200 by the end of the year. So one question that someone asked me was, have we begun our end of year run? Absolutely, I think we have. In fact, we probably began it back here the day of the election. But yes, I think the end of year run has begun. Again, it never goes straight up. Just like this, it'll move up and then it'll consolidate, might pull back a little bit before it heads higher again. So that could happen. But yes, I think the end of year run is starting up. So back to the dashboard, you can see bonds, the 10-year, the 20-year didn't do well, down 2.25 points because the 10-year continued to go higher. So even the 10-year is continuing to move higher. So if we take a look at that, you can see right here, 10-year went up as well. Down here we have the sectors, and all of the defensive sectors are at the bottom. And that's where you would like to see them. Utilities, staples, real estate, those are the most defensive sectors. Healthcare sometimes can be either one, but those are all at the bottom right now. Financials had a huge day. and industrials had a big day as well. And the industry groups that did well, you can see there's industrials there, industrials, industrials, industrials. Four out of the 10 are industrials. And in fact, if we look at this one here, industrial suppliers, and we'll take a look at that. So in stock charts for those, I don't think you even need a subscription for this, but in stock charts on the main page, there are a number of charts and tools, and one of those is the sector summary. So these are all the sectors right here. And if I take a look at the industrial sector, you can see the ones that move pretty well. And here's industrial suppliers that I just looked at a second ago. When I click on this, it brings up all the stocks in this group. And what you can see right here in number 2, in fact, if I look at this on the stock charts technical ranking. So this shows you the technical ranking, meaning the ones that are recently moving higher. The one at the very top is Powell Industries. If you remember, that's one that's on our list in the daily scan. We'll look at that in a minute. So that's right at the top of the industrial group. So that's one way that you can look for stocks just by looking at the sectors that are outperforming. And then finally, on the right-hand side, these are my top 10 lists. This is what I use to run the scans. And again, Powell is in the top 10 over here. Lumen, I talked about yesterday, it reported. And Lumen did well today. So you can see right there, it's looking pretty good. Had a great day today, right at $9. So that's one that might add tomorrow. We'll see what it does, because sometimes it'll pull back. I don't like to chase stocks. I like for them to pull back and catch them right as they're beginning to move higher, which I'll show you that in a minute. So these are all the ones in the top 10 right now. Powell's in there, Lumen's in there. All of those are interesting. So now let's take a look at this is the paper trade worksheet. This is now available on the website for annual subscribers. And you can see I've added a few to it. I actually took one out down here. Zim, I removed from the pending trades or the watch list because it just didn't look too good. But these are the ones that I added. And the new ones are these 3 at the bottom. So I'm not going to go through the whole process of how I weed those out and how I do the scan. I did that in the last couple of videos, so you can just go back and review it. But these are the ones that I picked out today, and I'm looking for things that have earnings more than 3 weeks out. So all of these are green, which is good. You can see these down here have earnings coming up very shortly. In fact, 2 of them have earnings tomorrow. So again, very risky. But these are the ones. You can see Powell is on there. We'll look at the ones that we added. We've got one on the 29th, one on the 4th, and one on the 5th. So first, we'll just go down the list from the top. DocuSign, looking good. So I moved the stop up on DocuSign. So you can see where it is right now. Had a great day. A lot of charts look like this, by the way, because of the market, how the market performed today. So a lot of charts look really good. So I moved the stop up. So even if we get stopped out, it's a 1% gain. Powell, you can see I moved the stop up on this. Even if we get stopped out on this one, it's a 9% gain. And that's just since the 29th. So what's that, about a week? We've got a 9% gain no matter what happens, because the stop has been moved up. So you can see right here, the stop is up here. This is the day that we entered, right back here. And as it started to move higher, we slowly moved the stop up till we got to break even. And right now we're sitting right there at this. What was resistance is now support. So that's where the stop is, right at support. What I'd like to see is for the 21-day moving average to come up and start to trade above where our stop is. So we're going to leave the stop there for a little while until that happens. And actually what I'd like to see is for this to continue to move and then pull back and give me a higher low. And then the stop will move the stop up to the higher low once that happens. But you'll see that as we move along. This is for educational purposes. Of course, I'm not an investment advisor and I don't make recommendations on what to buy. This is just for education and for practice. So that's how I recommend that you do this. So the next one here that we added yesterday VRT. And you can see right here, it gapped up today. So the vertical line is the day we added it. That was yesterday. So we added it because it pulled above the 21-day moving average with decent volume. So that's what the scan gave. So it appeared on the scan runs, and it just gives me these stocks that we're looking for. And today it had a nice run as well. So we moved the stop up on VRT as well, and we're right a little bit above our buy point. So we've got zero. We're breaking even right now on that one. So we'll look for an opportunity to move that up later. So these are the three new ones versus Sentinel. So again, it hit the scan right there. It actually is breaking out a little bit. In fact, I can actually put the line in on this one. Right here is where the breakout would be. So that's the high back here. So we're basically right at just a little bit above the breakout right there. So bought that one today, and stop is right down here. So what you can see is on these new ones, naturally the stop is going to be a little bit more risky, but it's only 6, 5, and 4% if we're wrong and if it starts to move down. So the stop right now is at 25.75. You might say, well, how did you pick that as the stop? Well, the reason I did it and what happened today gives you a really good opportunity because just about everything gapped up like that. So I'm putting my stop right at where the gap is. So right at the bottom of this gap right there, and just happens to be the 21-day moving average as well at the same time. So very low risk because if we're wrong, we don't lose much. And if we're right, this hopefully will continue to move higher and we'll slowly move the stop up just like we did on the other three. The next one is Oracle. I talked about this. Oracle had a nice move today. It was just basically trading sideways after a gap up after the last earnings back here. Moved up and just traded sideways. So it's basically pent up demand right in through here. It's like, think of this as like a coiled spring. John Carter would call this the squeeze. And in fact, if I look at John Carter's chart, he has an indicator. He's got a free one and he's got one you can buy called the Squeeze. Squeeze and the Squeeze Pro. Squeeze Pro is the one you can buy. But I actually reverse engineered his squeeze from his book by reading his book. And this is what the squeeze looks like if you don't have his indicator. He explained how he does it with, basically just standard indicators. So I created it. Anytime you see a green area, a bright green area right there, that means it's in the squeeze. So this has been in the squeeze and it's just getting ready to take off. In fact, it's already moved all the way up here from the squeeze. So the next question is, how much farther can it go? So it's getting right near the top of the Keltner channels, which, sometimes that'll be the reversion. So it may come back from there, but that's what that looks like. So that's Oracle. And if it reverses, so purchase price is 181. If it reverses, it'll come back 5% loss. And Google's the last one right here. There's Google. Again, it hit the scan today. It broke out. It did not break out above its previous high, so it still needs to do that. But I talked about Google before as a black candle, and you can see the black candle right here. This is after earnings. They had a big gap up, and then they pulled back the same day. That's why it's black, because it opened up here and it closed at the bottom, but it gapped above yesterday. So that's what makes it black. Black candles a lot of times are okay. They actually can be a good indication because it means the stock is strong for some reason, in this case, earnings. A lot of times it's earnings. But you don't like to see it come back and close the gap like Google did here. However, now it's starting to move back up again. So this might be a good move. Google might actually continue to go higher. We'd like to see it to get back up here to 190. We'll see if it can. But that's what Google looks like. If you want to see what a perfect ideal black candle looks like, SFM, Sprouts Farmers Market. This is one that has been on the top 10 list consistently week after week after week. And you can see why. So just look at look at how the trend, it just continually moves higher. So it had earnings on the 30th, right there, and it gapped up and then sold off all day, creating a black candle. The next day, it moved up, it moved down, and ended right in the middle of its range. Indecision. However, it didn't break down below the black candle. That's what you like to see in a black candle. That is a very strong chart and stock right there. So it now is taking off. Now it does have a spinning top doji, which is indecision. So this could be a pullback opportunity. So we'll see if it pulls back. But it also had a black candle back here on its previous earnings. So it has a habit of doing this. This is a great example of what a black candle looks like. So it had a black candle, it started to move higher, pull back a little bit, and then just continued day after day after day, just kept going higher, stayed right above its 21-day moving average. So that's where we are right now. We'll continue to watch these. The goal of this is to fill in all 14 lines here. This will be our portfolio that we'll track. I fully expect some of these to drop out of this list. Either they will get stopped out, either with a gain or a loss. Hopefully we can continue to move them up if we pick the right entry points. We can continue to move them up so that when they do get stopped out, they'll be stopped out with a gain. Like Powell right now would give us 9% if it stops out today. It's up much more than 9%, but we would like to just continue to follow it higher. Now, the nirvana would be we have all 14 of these filled in and none of them get stopped out. The market continues to move higher and these all move higher. And we just keep following them up higher and higher and higher. That's the way to do it. Folks that just like to buy stocks and don't have a real plan or method for doing so, I call them just basically collectors. They're just collecting stocks. In this case, we have a specific plan on how we're finding them, what list we're using to do the scans against, the specific things that we're scanning for, downtrend reversals, and then specifically where we're going to get out, either at a loss or hopefully at a gain, or worst case, break even. All right, so that's it for today for the daily scan. I hope that was interesting. Congratulations to everybody that voted, regardless of who you voted for. It's important to do that. We'll see. I think the reason the market took off today was primarily because it was decisive. And I said that yesterday. I said, if it's indecisive, if it looks like it's too close and it's going to go into a prolonged period where there's not going to be a clear winner, the market won't like that. But there was absolutely a clear winner yesterday, and that more than anything else, more than just the policies, there's some policies that Trump has that the market might like as well, but I think more than anything, it's just that it was decisive. So there's no indecision about it. Anyway, that's it for today. Have a great week trading. I'm going to do one on the overall market and the Harris and Trump trades that we went through last week with Mr. Zuber. I'm going to do that later today. So watch for that on the One Rental at a Time channel. Thanks, everyone, and I'll talk to you soon.